that are selling products online, and last mile logistics is what is really taking off here in the region. It has been happening before, but today it's basically you're getting so much more money in it. I mean, just a few days ago, a buy now, pay later company out of Saudi Arabia called Tamara raised $110 million in their CA. I mean, that is unprecedented even on a global basis.
I mean, I was going to follow up on that, Fadi, because it is a landmark deal, and some of our sources have actually indicated that, you know what, there are concerns that we're getting into a mini bubble around these valuations.
And I am in agreement with that. There is, because there is so much new money coming into the market. The sovereign wealth funds are starting to invest. They are seeding a lot of VCs. And so maybe a little less companies than there is money, and so you get, you know, the supply and demand, and everybody is rushing to invest in these companies. So I think, yes, there is a little bit of a valuation bubble, but there is a valuation bubble in everything during this pandemic. So there is so much more capital coming into the market, and so by definition, valuations are going up, and it's a bit concerning for sure.
Talk us through how much your war chest looks like. What have you got ready to deploy? Are you all in with your funds? Have you got money on the sidelines? What's the size of Fadi's war chest?
No, we're early stage investors, so we invest in seed and Series A, and we've been, you know, investing for the past 15 years in this manner, and we continue to have funds to invest in these early stage markets, so that we have an evergreen continuous investing vehicle that continues to invest as the markets continue to grow effectively. So and this is the strategy that we feel is best suited. So it's very patient capital, and it is continuous capital that gets deployed in companies that are promising and are building the future of the economy of the region.
Right. Fadi, we've seen this growing competition between Riyadh, Abu Dhabi, and Dubai, and all of them are revamping regulations, accessibility, transparency. I mean, there's probably not a single front that's not being worked on. How is that trickling through to your shores and your investments?
Look, you know, there's nothing better than competition. We know from the private sector that competition improves products, improves services, and keeps companies on their toes. And I think this healthy competitive environment in the region is producing a lot of change in the regulatory environment, and that's extremely important for all the startups in the ecosystem, and specifically in fintech and financial technology. And we're, you can call it competition. It's very good for the ecosystem, and it is going to open up a lot of opportunities. I would add that there is Cairo as the fourth city in the region where there is a very active ecosystem, not competing necessarily with the Gulf, but watching the Gulf and specifically in fintech, really building companies that are for mega cities that could scale in Africa and other mega cities globally.
Fadi, Careem was in 2015. Can we have another Careem in the UAE, and if so, which sector?
I think so. I think you already have Noon, which is, we don't know their valuation, but Noon is a homegrown e-commerce company competing with Amazon. It is estimated that they're in the billions of dollars of valuations. I think they're looking to go public sometime in the coming 2 or 3 years. Once they do that, you'll see that happening. And so, e-commerce and financial, again, back to financial technology, these are the two sectors that you're going to see possibly unicorns. I think, a company like Tamara, which raises $100 million in their very early stage, they're barely a year old. I'm not sure what their valuation is, but assuming they deliver and execute, so that could be another one.
Yeah.
So if you look at what has been happening globally, in terms of who becomes a unicorn, I think you will see that the region eventually tags along.
Fadi, there's an enormous interest in Bitcoin. It's, again, one of the most read stories for our clients on the terminal. Are you buying any Bitcoin at the moment?
Well, I've been in it for quite some time. So
So are you buying more?
I don't know if I'm buying now. I won't buy now, but I've been in this for quite some time. So we're happy with what you're seeing. But more importantly, on Bitcoin and crypto in general, is that there is a serious engagement by the regulators in the region to look at how they want to actually regulate, and there are some crypto exchanges that have been regulated out of ADGM in Abu Dhabi.
Up next, as HSBC turns in the best quarter since the pandemic began, we speak to the bank's CFO, Ewan Stevenson. This is Bloomberg. Daybreak Middle East. HSBC's latest earnings were released whilst we were on air on Tuesday morning. The bank posted its best quarter since the pandemic began, as an improving economic outlook drove optimism about the ability of borrowers to repay loans, and its strategic reset to Asia remained on track. We spoke to the company's CFO, Ewan Stevenson.
It was our best quarter this quarter since the pandemic began. Profits up almost 80%. A very strong recovery in other parts of the world outside of Asia, particularly fueled by a turnaround in credit. So overall, very, very pleased with the results. And I think also when you look at our core lending platforms, mortgages have continued to remain robust in places like Hong Kong and the UK. And we're also seeing a really strong recovery now coming through in the pipeline and commercial. So pleased with the results and cautiously optimistic on the rest of the year. The situation in India is tragic. We've got a lot of our own people there, which we're doing our utmost to protect. We are concerned about the emergence of possible new variants and resistance to the existing vaccine programs. If you looked at what really fueled the results this quarter, it's really been the success of the vaccine programs and the strong turnaround that's had on credit.
Right.
So we are concerned about India, and our heart goes out to the people there.
Ewan, your results were mainly driven from profits in Asia. In fact, it appears in terms of geographies, that was the only profitable region vis-a-vis the rest of the world. Does that give you more of an incentive to accelerate the shift away from Europe and the rest of the world and focus on Asia?
Well, we've had a turnaround plan that's for over a year now. We are seeking to restructure our US operations. We're trying to restructure our European operations. We're making good progress with both. UK remains very much core to us. We have a great business in the Middle East and elsewhere. So we are concentrated on the growth opportunity that we see in Asia, but you should expect us to continue to keep a broad international network, which is a critical, we think, for our global trade platform.
You ring-fenced your UK assets a few years ago. There's also talk of you relocating and selling businesses on continental Europe, in continental Europe. And of course, then we got the transfer of various executives to this part of the world. Tell me, I mean, is that a shift away? And does it really also reflect a longer-term strategic view of where HSBC should be in, let's say, a couple, 3 years or thereabouts, and what would it look like?
Well, you can see in today's results, the bulk of our profit continues to be in Asia, and the bulk of our growth opportunity is definitely Asia. So shifting 3 of our 4 global business chief executives to Hong Kong is a very logical move for us. Noel and I are going to continue to be based here in the UK, which is our headquarters, and we will increasingly run the bank as a dual hub model across Hong Kong and London. But definitely for us, shifting more capability to Asia is a clear strategic priority. We think we can get great returns down there, and it's got great growth opportunities.